YouTube, Salivate Metal here, and it is July 3rd here in the United States, one day before Independence Day that we celebrate. We are seeing some moves in the markets, and they are to the downside drastically. It looks like for gold today, taking a little bit of a dive, and they've already been low. They've gone down quite a bit over the last week or so here. But we're going to find out and kind of dip into this with this article here a bit because there's some strange things happening. And could some of this be related to the video I posted about July the 5th? What will happen on July the 5th with this massive velocity of trading in the physical markets? Well, this may be a precursor to either that, or it could be the exact opposite of what was predicted going on here. We shall see how this all turns out. But quite interesting that today gold suffered a lot of a price drop, and they fell hard on a large volume that is seen across the board. This is a long time coming with the euro and the pound trading strongly. This has led to a strange scenario where the gold prices have been falling despite the fact that the dollar has been weak across the board. It is clear that the central banks in the Eurozone, UK, and Canada are seriously looking at reversing their rate policy, and this has led to funds flocking to the respective currencies in their hope of better yields. This meant that the funds got pulled out of lower yielding assets like gold and silver, and that is why we have been seeing the gold prices keep falling over the past couple of weeks. With the 1240 region being broken decisively today, the next stop is 2020. And that's probably the most concise explanation that I can think of for some of this happening, and because the other currencies are strong. And so when the dollar is weak but everything else is strong, that might make some sense out of it, and the fact that there's been some selling here. But the dollar has recovered a bit since the morning. In this case, as this writing, though it's not sure how long it was likely to last. The recovery might be a bounce before the dollar begins to fall again, or it might be a stage of full recovery in the days to come. The news and the data from the U.S. will be watched very closely to see if there's an improvement in the incoming data, with a lot of data slated to be released from the U.S. later this week. We're seeing the dollar rising in anticipation of the events. And we see some geopolitics here with the Chinese PMI pressures on the Aussie here. So it's going to be interesting. There's another take on it from this article. The gold prices sink to 7-week low as big week for the dollar begins. So they're anticipating a strong strengthening dollar in this particular article. And so they talk about the significant reason for the caution is the fact that the U.S. dollar is likely going to be on the move this week. Tomorrow is Independence Day in the United States, and traders return on Wednesday to the release of the FOMC meeting minutes from the bank rates decision in June following the non-farm payroll on Friday. And given the pronounced downtrend that has been seen in the greenback as of late, with fresh 10th-month lows printing on Friday just ahead of the close of Q2 of the second quarter here, there will likely be considerable focus on these drivers as traders attempt to read the tea leaves around what the Fed might be doing in the second half of the year. This is relevant for gold prices, given the fact that the continued sell-off in the dollar has failed to inspire any lasting strength in gold. While the U.S. dollar drove down the 10-month lows, gold prices continued to sell off fresh 7-week lows. And this speaks on the rising inflation expectations being seen globally after last week's comments from Fed Chair Janet Yellen and ECB President Mario Draghi. This can keep gold prices moving lower even with U.S. dollar weakens, and traders can continue to move forward with a downside bias for gold prices. The matter of entry is a bit more of a challenge given that we're sitting very near the lows, but we looked out at last Monday when gold prices had run lower, and we can incorporate prior support swings to help in seeking out lower high resistance for bearish continuation approaches. On the chart below, we can look at 4 such areas, 2 of which have included as part of the strategy in last Monday's article when I talked about it, and can certainly be reused and incorporated for bearish continuation approaches. So there you can see the resistance levels here. So very interesting indeed. You know, you can't discount the cryptocurrency aspect as well. There's a lot of that going on, and of course the paper trading. You know, is the sell off in the paper or the physical, and so what will happen? You know, with the Fed's statement, and also none of these two articles mention the recent news about the stress test that we talked about in a prior video as well. Could that be playing a role too? More confidence in the markets all around, more confidence in the banks, their ability to handle a recession is something that should be considered. At least will they be able to handle the recession as deemed by the Federal Reserve? So it'll be interesting to see where things hold out here. So post your thoughts below on this latest market news with gold and silver both going down today, and what's going to happen on July the 5th. You know, that Andrew Maguire had predicted there'd be some high velocity trading. Could be happening as I'm recording this video. You know, this is there's a lot of activity that can happen between now and the next couple of days here. It'll be interesting to find out for sure. Post your thoughts below on what you think is going to happen. Gold and silver down. Are you buying? I wish I could. I'm all spent out from some recent pickups that I had made, from which I have yet to show. But I will soon. So post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, comment, and subscribe, and click the bell notification.